Welcome back, and joining us now on the show is Ajit Mishra. He's Senior VP Research at Religare Broking. Mr. Mishra, hi, thank you so much for joining us. And the focus on conversation is gold right now, because we've seen strong gains in the previous year and this year as well. We've seen a new all-time high, and we seem to be holding above $2,300 an ounce with whatever different fundamentals, events and data points that are coming in right now. What's your sense, first of all, on what you would watch in sense of global central banks, geopolitics, because these are a couple of factors which clearly have been supportive?
Yeah, good afternoon, Manisha. So yes, we have been seeing a steady run in gold for the last 3 years, including the current, performance that we are seeing. And in the recent report, we have highlighted like 6 key factors which are basically favoring this up move to continue in the current calendar year as well. So first and foremost is the inflation, which is still sticky, and we have not seen any sign of slowing down in US. Today we have the CPI data also scheduled. But at the same time, there are hopes that there could be one rate cut by the end of the year from the US Fed. So both these factors, like a sticky inflation, but at the same time, hopes of possible rate cut from the US Fed, is helping this gold to continue with their current momentum. At the same time, this geopolitical tension. So earlier it was Russia, Ukraine, and of late we have started seeing that the Middle East tension. So that has also resulted in a sharp uptick in the demand for the safe haven that includes gold. And another important aspect that we have highlighted, that the demand from the central bank. This has something which we've been observing as a new trend emerging. Where China is leading from the front, especially in a scenario like this, wherein the global economic growth is also showing sign of slowdown. So, and lastly, that the investment demand is also helping this index, this metal to shine further. So all these factors put together are indicating that this prevailing momentum, which we are seeing for the last 3 years, continuing in 2024 as well.
Ajit, would you say that many of these factors are now baked into the prices? And from here on, what do you think that the gold prices will watch for? And is there any sense on where do you see the prices heading from here?
So yes, somehow, yes, all these factors have already discounted. But at the same time, we are still seeing that, issues are lingering, and we are still not sure when we are going to see that, inflation coming down in the US, and accordingly, the reaction. But I feel that somehow it is already like they're okay with this kind of inflation, is what the recent statement from the US Fed chair indicates. So I feel that despite all the known factors, this momentum is here to stay, considering that this, lingering tension, especially in the Middle East, that might continue to help this, and plus the, global demand, especially from the China central bank, that will help this metal to continue to shine. Now coming to the short to medium term targets, we are eyeing 74,000 as an immediate target, and eventually around 78,000 in next 3 to 6 months. And we feel that instead of accumulating or buying at the current levels, one should gradually accumulate gold, especially after the recent run up. So until unless we break 65,000 mark, we feel that this tone is likely to remain on the positive side. And if we break, 65,000, then this scenario might change. So as of now, it's something that one should look for accumulation on every dip, with 74,000, 78,000 being the probable targets.
Ajit, also, when you look at the buying patterns within India, how are you looking at that? Because while, of course, we've seen jewelry buying, which continues to be a big chunk of Indian buying, but would you say that the ETFs, the investment buying also seems to be doing well now?
Yes. So, in fact, when it comes to the global investment demand, the OTC demand is slightly on the higher side. The other demand, basically for the ETF and physical demand, they are also seeing a kind of a uptick, but not in comparison to what we are seeing in the OTC market. But domestically, yes, since during the festive season, we usually see the uptick in the demand, and that might continue in the probable future as well.
How are you looking at Indian financialization in sense of gold continue from here on? I mean, do you see more products come in? Because even now, as we continue to talk that, as you said, OTC market, the physical market is more stronger. And when you look at gold as a part of portfolio for many of those, as a financial product is still under-owned.
That is correct. So, in fact, that we have the perception that one should have only gold when they are risk averse or something like that. But I feel this is the best instrument if somebody is planning to diversify their risk, and especially in the market like this where we are seeing the equity markets also doing well. So we usually recommend to our clients, so at least based on their risk appetite, 10 to 20% should be gold in their portfolio to diversify that. And now people have started accepting this, be it through souvenir gold bond or through ETFs. They started investing. So obviously we'll see this trend, strengthening further in years to come.
Okay.
Okay, all right, Manisha. Thanks very much for taking us through the commodities segment and precious metals in focus. We need to take a short break, but up next we'll talk technicals. Pritesh Mehta of Yes Securities will join us. Stay tuned.